of you. I learned a lot from the presentation of Dr. Mendoza. And coming from public ad, I took my BA also in public administration. And Korea is the first country that I visited. And so it's with all humility that I'd like to give some points that I'd like I see value in further maybe looking at. First one, a lot of these points have already been mentioned, and I think it's important. I see the value of looking deeper into this. The first one is, Professor, you made mention that there was an overlap. But I think the question of whether there's an overlap, I think the bigger question is whether the overlap is necessary or not. Because there are, in other countries, state-owned banks who has the same mandate, tending to the same markets, clientele, offering the same types of products, but they remain inexistent. They coexist with one another. In China, I cite China because I studied there for 1 year. They have 4 big banks. These big banks are among the biggest in the world now. ICBC, Bank of China, ABC, which is very similar to Land Bank in terms of its origins, as well as China Construction Bank. These are big 4 banks in China and in the region as well, and internationally. But they remain in competition with one another. There was so far no attempts to merge them to make a bigger one. So that's the first point I'd like to pick up. The second one, again, this was already mentioned. If both banks are doing well, why merge them? I think one of the main impetus for the merger was disincentivize the underperformers, the non-performers. If you don't shape up, you will be subject for consolidation, or you will be absorbed by a better performer. But in this case, based on what was presented in terms of the financial profile of both banks, they seem to be performing well. So I just don't know if there are bigger ulterior motives behind the merger, aside from financial pragmatics. And if ever there is really a trend among GFIs, government financial institutions, to be really consolidated, I'd like to ask the question of why start with these 2 big banks? There are many GFIs out there. Well, at least the approach of China here is more gradual. They will start with smaller ones. They would let the bigger ones, the more performer, the better performers, absorb the non-performers before they start building one for bigger players to merge. But in this case, we have 2 big performers, 2 big banks, the biggest in the GFI sector. Both are performers, and we would start merging from that. So, not that I question the wisdom, but there may be other ways of looking at the picture. The third is, I'm not sure if this would be giving enough space for the paper, but I'd also like to hear the response from the industry, notably the competitors. It was made mention that post-merger, it will become number 2 in the industry. So I'd like to see how the industry will respond to it. Definitely, it may raise a lot of eyebrows. So how will it impact on competition? So antitrust issues. Number 4, Ma'am, you made mention that there's a potential that cover-ups for bad loans may happen. So, knowing that this may be on the pipeline, or this could happen, what potential are there already plans being discussed to countermeasures to prevent this from happening? In China, they also suffer the same problem. non-performing loans contracted by unperformers or non-underperformers, SOEs, which borrowed money heavily from the big four state-owned banks. So this is also a concern. My last point, the way I looked at the presentation, market impulse was less of a motive or it may have played a part in terms of the motivation for the merger. But there are a lot of other factors that are also at play, like the tensions between the legislative and the executive, so that's a governance aspect. And then there's a trend towards consolidation. So if there's already a trend, let's just proceed with it. But the market impulse, was it really a big factor in pushing with the merger? My sense is that it was played a marginal role, or played if not downplayed, it's not as prominent, because mergers like this usually that will take a driver's seat. In China, for instance, when I did a paper about competition, I looked at the merger of two big railway companies in China. So that's CSR and CNR. These are both state-owned. They compete for overseas projects. And now that China is a major infrastructure donor, infrastructure lender overseas, both these two state-owned enterprises are competing with one another for overseas projects. So one of the major drive behind the consolidation was to address this, so that we can create a national champion that will allow us to compete better with Bombardier of Canada, Kawasaki of Japan, Siemens of Germany. So in that way, there's the commercial, the proprietary, the market impetus, the market aspect of the merger was really on the forefront. But with the LBP-DBP merger, I don't see the market impulse being the main motivation. Thank you.